All right, all right. Um, we had a technical difficulty with the first video, but I think that could be a good thing and a bad thing. So we got everything up here. Um, what we did talk about in the first video is how to actually calculate the dividend and then how it works. So if you remember, the dividend for this problem was actually, it says that there was a debit to retained earnings for cash dividends declared. So we know that the dividends are declared, there's a debit, so there's a decrease in retained earnings, and a credit to dividends payable. So that means this entry is made to recognize that once the dividends are declared, they're actually a short-term or current liability on the balance sheet. So they become a liability on the balance sheet. But remember, the dividends do not actually impact cash until they're paid. So we'll have this entry, which will actually debit our dividends payable and then credit cash for the actual payment. So that's when it's actually paid. So there's no cash impacted when the dividends are declared. Cash is impacted when they're paid. And that's what we're looking at when we look at the statement of cash flows. So what I did before, so like I said, this is great. This is like a time-lapse video because there was an error in recording the first video. So if you remember, we need to calculate how much of a dividend was actually paid in 2016. And then this is the calculation that we're going to use. So we take the ending balance of retained earnings. So we're on the balance sheet, we're looking at that ending balance of retained earnings, and that's the beginning balance that's our beginning balance for 2016. So that's what we're starting with. So that's this number right here, this 354,280. So if you go to the balance sheet, December 31st, 2015, you'll see on here it has 354,280. So that's our beginning balance in 2016. We're adding in, this figure here is net income. So we're adding in net income, and it tells us that there was an increase to retained earnings net income of $141,680. So that's this here. Remember, retained earnings is increased with a credit. So we increase retained earnings. So we got the beginning balance, the increase, and then this is that total. So this number is the total. Beginning balance, the increase. So we're looking for the difference so that we get the amount of dividends that were paid that year. So this is the ending balance of retained earnings for 2016, which we get on our balance sheet for December 31st, 2016. If we look here for retained earnings, we'll see that amount right there. So that $393,960. The difference between this gives us our dividends that were paid. So this is what was paid out. We also know that in 2015, there were dividends payable of $20,400. So why did I add that in? Well, I add that in because we know that was paid because we have what's left over. What's payable now is the $25,500. So we add these two figures together, and then we get $122,400. $122,400. So that is what we know has been paid out. So that's been paid out. That's the change in cash. That's the less dividend. This is still payable. So this is the $25,500 it's been debited from retained earnings, but remember, there's no cash paid out. So we subtract this from that number, and then that's where we get our less dividend. 96,900 is what that should be. So that's a gimme. That's a gimme for the assignment, but I hope this helps. That was a great question. Keep the questions coming. This worked out great with the having this already written out. For problem 14-1B. Let me know if you have any more questions. Happy to help.